What's up? We're back. Back at it. Dang, Gaines Hunter, I'm right here. Relax. 10 seconds late. Where you at? oh. oh, man. Hope you guys had a decent rest of the AM session. Let's get some music on here. Oh man, I'm a little annoyed with myself. It took one trade. Look how we're just bouncing between my demand zone and then the support resistance. I took a trade, shorting. Let's watch my trade. Shorted here, top of the range. We have a kind of like this symmetrical triangle going on. So shorted up here. Initial stop loss was right above these wicks. And then we kind of chop around. So I'm like, all right. I was expecting us to kind of head back lower. My take profit was like right around here. So I decided to tighten my stop loss. Mistake. So I tightened my stop loss to, well, you'll see where I got filled. There. I stopped out there. So too tight of a stop loss. And then what happens? Well, would you know it? Take profit hit. Now if I had left my original stop loss right up here, would have been just fine. So, just annoyed that I, felt the need to tighten that up. I don't know, didn't want to take a loss. So that's fear of losing right there. That I'm working on eliminating there. So a little annoying, but moving on, shaking it off. So dip below into the demand zone here, past this trend line we had formed. Now we're above the trend line, right under VWAP. Let me pull up financial juice. The rate statement, I don't think it's going to be a surprise to anybody. That comes out. I think the more interesting aspect will be when Powell talks in a half hour. So that's that. I would advise not trading this, just so we're clear. Is the difference between trading morning and afternoon noticeable? Yeah, I think so. But it depends on the kind of day too. Sometimes, a lot of times, mornings have been a little slower lately. And then a big move happens after I get up off the desk. And so I kind of miss out on what would be a more interesting move. So, kind of just depends. So 1 minute till the statement. There'll probably be a spark in volatility. We'll see what happens. Books on Bookmap. Look how clear they are. Nothing on the books. No one wants to have a resting limit order that just gets sliced. There's still some orders at 51 on ES. So that's kind of fun. Let's see what happens here. 30 seconds till the statement. Something about unchanged interest rates or whatever. Shocker. Ten seconds. 3, 2, 1. All right, spike up. Oh, wow. Oh, pretty good. Pretty good. Wow. We're about to hit those limit orders sitting on 51 on ES. There you go. Eating through those. Filled. Wow. That is quite the dildo, if you will. That is very interesting. Glad I didn't short. Yeah, no kidding. Decimated. And your fill getting out would have been terrible, I'm sure. So, you know, this is nothing new. I'm sure it's nothing new with the interest rate. Just some like algo reaction. So, interesting part will be Powell talking in a half hour. Oh my gosh, 5.5. Wow. Everyone knew that. So, still a big reaction though. Tapping into 690 supply. I expect that to keep going. Let's see. Let's see what happens. Just watch. Wow, wow, wow. I expect this to get erased when Powell starts talking. I don't know about you guys. Still going, huh? So hit 318, March 18th highs there on NQ. Imagine the fools buying this run up. Hey, if they can buy it and get out right away, do it. Yeah, it's I would not want to be holding any position going into Powell. That's for certain. Yeah, news came out. That's why I'm live streaming. FOMC rate decision announcement, statement, and then Powell talking in a half hour. I am going to probably use a fib, 50% retracement of this move. Let's wait. I might just kind of, let's see if we keep going, but probably around here on ES. Looking to see what happens at the 50% retracement. Do the same on NQ. I like using 50% retracements on large moves. A lot of times, like for instance on this kind of move, buyers could look to reload at the 50% retracement. FOMC, who knows, but in general, could be a helpful guide. We'll see. All right, she scalped these big moves. All right, good on you, I guess. Seems a bit like a gamble, but good for you. You just shorted Dow with one contract, a little lotto play for FOMC. All right, Miguel. Good luck. Are we going to make new highs here? Or is it going to reject again? Let's see. All right, new highs. I think every day trader has a little gamble or in them. I think you kind of have to be a little bit like that. All right, wow. Slice on through, huh? Okay. Okay. Slicing on through. Let's see what other levels we got going on over here. We have 18th highs there, as I have on the chart. Here is 14th. We have some consolidation and then a sell-off. 13th, we have some levels. So let's just see. Top of that red zone I drew there is 14th. Family Griffin, just starting with trading, don't know what to do. Piece of advice. It's such a broad question, really. There's so much to it, you know. I think you gotta start by learning the basics, like look at basic trading videos or read some kind of book that's covers the basics, like terminology, instruments, some markets. Get into some price action. I will learn some price action concepts. I mean, it just depends on kind of what you want to do. Do you want to be swing trading? Do you want to day trade? Do you want to scalp futures? Do you want to trade Forex? Do you want to do options, equities? There's so much to get into. It's just... Yeah, Pal speaks in 23 minutes. I've not traded this afternoon. I did one trade earlier, which I already went over. It was annoying. It was a little stop out. But it was only because I tightened up my stop loss. Shouldn't have done it, so... Shorted, is this the one I shorted? Shorted here. No, wait, no. I'm tripping. I'm on the 5 minute. No, that 1 minute? Okay, tripping. Shorted here. Stopped out and then target acquired without me. All right. Yeah, looking for a reversal. I mean, we're already getting that, but I mean, I feel like every FOMC, big move, Powell comes on and splashes water on that and things cool off. And a lot of that move gets retraced. That's not surprising by any means. I don't think Top Step still has a news rule, does it? Or is it because are you funded? Maybe it's the funded you can't trade news, but Combine, I think you can trade news. I think they used to have a news rule. Someone can correct me, I don't know. You can make $600 in 30 seconds. You also lose $1,200 in 30 seconds. Or, you know, it's a bit of can be a bit of a gamble. Spectre of Wall Street. I already paid off Motive Wave. It was a little pricey from the get-go. I can look at my receipts or something, but $175 I paid 4 times, so kind of pricey, but it's done now. It's over, and now I have it. So it's not right for everybody, but I know like Edge Clear. If you have like an account with Edge Clear, they have their like white labeled version of Motive Wave, which you can also lease, and maybe it's a similar rate, or I don't know. I don't really know, but I think Motive Wave has a sale starting to, when is it? Today or tomorrow? You pay extra for data. Yeah, you got to pay for data. Like through your brokerage. Unless they give it to you for free. Depends. Have you read Trading in the Zone? Yeah. Good book. I would maybe consider shorting highs where it's very minimal risk for very solid reward. I think that is reasonable. Here's some, let's see, here's some news. Rachel's always got to make it a little weird. She says, don't forget to squish this man's like button. Hey, you heard the lady. Happy wife, happy life. Squish that like button. RH, my win-loss ratio. Again, I haven't been able to get my trades from this account working in TradeZella for some reason, so I don't have very good statistics. I think right now it's probably around like a 45% win rate. So traders price in additional Fed easing, blah blah blah. Fed projections show one fewer rate cut in 2025 than previously forecast. So we'll check in. We'll check in with Powell here when he gets on the podium. We can listen to him if you guys want. Twisty Corp, thanks for the advice about losing days, Daniel. I was down $500 my first 2 days, and I'm finally back to where I started. Great, you can do it. Just say it. It doesn't matter when those losing days happen. Just stay focused. Be good at taking the loss. Except you're going to take some losses. That's what I'm trying to get better at. Like, it's okay taking a loss. It's okay closing out a trade for a loss. It's going to happen. It's all part of it. And it's fine. Passed my trading combine, says Wootman. The Wootman 72. Good job. Gerardo, hi. How you doing? Win rate does not mean anything if your losers outweigh your winners by a long shot. That's for sure. It's all part of a bigger picture. So win rate plus like your profit factor. Daniel, have you tried Apex? Yeah. I just loaded up with some Apex counts. We'll see. Vincent is one of the best traders I follow. He had a handful of red days. Yeah. Yeah, I saw that too. It happens. And now he just made like 70 grand off a SMH or something. Or SMCI or something. Any experience with copy trading on Apex? Like getting 20 accounts and scalping for... I'm about to try that. I got it loaded up today. Got to pass the combine first of Apex evaluation. So I'll give it a shot. I'll let you guys know how that goes. All right, coming into we have 50% retracement here on ES. Looks like we might tap that. I want to see what happens. Do we just slice right through it, keep heading back down? Or is it hold for the time being? Provide a little bit of support. Let's see. Are buyers interested? 50%. Warren, the trade copier, the one I would use is the Motive Waves trade copier. It's really good. Did you join the investor waitlist? No, I'm already part of the thing. I'm already part of it. Gerardo, you're long. All right. So 50% retracement. Held for the time being. Liam, do you still have to pay the monthly fees if you pass? Yeah, on Apex, I think you do have to pay a monthly fee. Unless you do like the lifetime, right? I think, you know, if you're long, you definitely want to see 50% hold. Just, I would be in a very scalpy mentality. Piles on in 13 minutes. Least paid, you longed 52.48. I think that's valid, 50%. I like 50% retracements. I like seeing them hold. So I think it's legitimate. Yeah, Dylan's simple comment about the 50% retracement after news is making me so much money. I feel like I owe him something. Yeah, it's pretty good. Pretty good. Dylan's a goat, man. He's been really helpful to me. Okay. All right. NQ now at the 50% retracement. ES slightly below it. Let's see that hold. What I would prefer, I think like an easier situation to, to scalp would be get back up around these highs going into Powell. But that's maybe too easy. Here's a good comment. Don't try to fly a kite during a tornado. There's some food for thought there on trading the news. Liam, what's so you paid for the lifetime. How much is that? Mianora, whatever he says at the end, Al, he's going to say, to conclude, we are strongly committed to bringing down inflation to our 20% target. Yeah. So don't pay lifetime if you're doing Apex, says Jose. Liam says it's $160 for a lifetime for a 50K account. So I'm interested. I'm curious. Or he says wait the other way around. I'm curious, Jose, why not do the lifetime and what the pros and cons are. Because I'm new to the Apex world. How much is it to be part of Carmine's group? Back in the day, his course was like $350 for the supply and demand and $400 for the A to Z course. That's all, like a one-time thing. That was really easy to find on his website. Now he's shut down that course and he's doing a different program, which I think is more expensive. So I don't understand why wouldn't you buy lifetime if it's only $55 more? Like if you're in there for 2 months, wouldn't it make more sense to be lifetime? Trades by Matt is a scammer. He's using 20 Apex demos and only makes money from signups. His payouts are on like Apex's website. You can see Apex post their payouts, and you can see payouts. All accounts are demo when they're like XFA, like funded type accounts. Those accounts are all demo accounts. You can still take real money withdrawals. So lifetime only means like, so lifetime is just the life of that one account, right? It's not like, so as long, if you blow it, the lifetime doesn't matter. You have to do it again, right? So whoever bought 5248, that worked out. Little drawdown, not much, 2 points. Solid. 50% retracement held perfectly on NQ. If you guys are not using 50% retracement yet for big moves, news like this, highly recommend it. Just take the initial move, mark out 50%. So, I mean, we could say, well, this initial move all the way up here. Oh, we did consolidate. So it gets a little arbitrary, as technical analysis can be, but whatever ends up helping you. So what did prop firms get out of having people trade on demo accounts? I mean, one would be data. Like they can see your trades, they can you know, whatever they want to do with that, they could do with it. If there's a really good trader, they could copy his trades on a real money account or something. Is this a recorded fake live? What? What are you talking about? I'm like responding to comments. How would I do that? I'm a scam, that's how. Powell's in about 6 minutes. He's always late though, right? Apex does post their payouts. I mean, I don't remember where it was. It's somewhere on their website. Maybe at the bottom or... Oh. Let's see. While we wait. Maybe... Oh, payouts. Resources. Yeah, here we go. I'll put this link in there here. Dude, you gotta do a trade-off with Patrick Whelan? No, I don't. I'm not trying to like... I'm not really trying to do trade-offs right now. Like, it's fun, it's entertaining, but like, that's not... My focus is just getting better as a trader. You know, not worrying about competing against someone else. I just want to... Right now, I'm competing against the markets, competing against myself, you know? Like, that's hard enough. Oh, Minute Film. I'm glad you're back, dude. How do you go about trading in this sort of environment where you just don't? Well, dude, I would do what I'm doing, which is not trading. The time between the statement and Powell speaking is pretty volatile. Price can go any, I mean, just go any which way. So it's a bit gambly. Bigfoot, it was 5,000. Trading is a lonely profession, yeah. From your video with Carmine, what did you take away from that experience? That even someone at his level kind of goes through some similar, um, you know, frustrations and things like that. You never really truly feel like you made it. You know, you can be humbled in an instant. Yeah, I mean, I think that was pretty interesting. Guts says, once I become a great trader, will you go live with me? I don't know. I mean, I'm not really going live with anybody. All right. Let's see. 2.5 minutes away from FOMC press conference. I don't think he's going to be right on time. Let's see. I'll turn up the volume. Oh, it's music. Yeah. All right. I might forget about it if I don't have the volume on, so we'll listen to their cheesy little hold music. Bull flag on the 1 minute? That looks like a bear flag to me. Like, I'm not looking at this so much anymore. I'm looking more so at this. But maybe I'm looking at it wrong. Maybe it's more I mean, for a flag, for a 1 minute flag, I would never draw it like that personally. The Fed's music is banger. What do you mean? My bad. I'm not gonna yuck your yum here if you like this kind of music. Garrett wants to know if I think streaming your trading sessions helps or hinders your performance. I would imagine it helps prevent you from going on tilt and keeps you accountable to your plans. For the most part, yeah. And then there's a few times where I hesitate for whatever reason, and I don't think it's twofold, right? So I think there's times where I hesitate or I miss something because I'm distracted, and then there's other times where I'm kind of held accountable more. So maybe in the end it's a wash and it's, net neutral. I don't know. I was thinking after like a month, if I'm like, man, I've not been trading well, I think I would take like a week off from live streaming just to see if that improves things. All right, it's 2:30 or 1:30 Central. Empty podium. Anyone want to guess Powell's tie color? I think he's been doing purple lately, right? I think markets are reacting to the empty podium. You think Powell has puts? There he is, purple tie. What do you know?
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American
Can you guys hear it all right?
The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged.
I turned it up, is that better?
And to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments.
Yawn.
Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the
such a
fourth
boring
quarter
job,
of last
honestly.
year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants
he's got crayons
generally
too.
expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance.
He uses supply and demand too.
Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories,
Back to VWAP, yep.
core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE
Erasing
inflation
that move.
falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings.
Oh, they like that.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint
let's see those
too
guys
soon
typing
or
away.
too much
That's interesting.
could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level
Elevator
more gradually.
moves.
In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Goals.
Thank you. Microphone, right. Steve Leisman, CNBC. Mr. Chairman, the projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy?
If I was in there, I would say, that was great, but can you explain it like I'm 5? I have no idea what you just said.
You know, we've seen incoming, as I pointed out in my opening remarks, we did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that
Caller
caused
puts.
people to write up
Tell me
their
in plain English
inflation.
how caller
But
puts.
Nonetheless, we continue to make good progress on bringing inflation
Kind of
down.
expiration
And so
do you recommend?
When you, just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
Okay. And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down.
Buying VWAP was the move, I guess.
Current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Kind of surprised it's been able to. We're back at highs now.
Nick Timmeros of the Wall Street Journal. Chair Powell, during your congressional testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back. And if we ease too late, we could do unnecessary harm to employment and you know, people's working lives. And so, you know, we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that.
3 circles on the bottom. We have
January
their stops,
numbers
icebergs,
were
and
very
cumulative
high.
delta.
January CPI and PCE numbers were quite high. There's reason to think that there could be
I mean,
seasonal
it says that,
effects
but maybe your
but
question is what
nonetheless, we
those
don't want
are.
to be completely dismissed.
Icebergs are like hidden liquidity. Stops are stop outs, people getting stopped. And then CVD is just cumulative delta.
Times a bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But You know, we didn't, last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't.
Yeah, I like ES. I like looking at the books on ES a
What I
lot
was saying was
compared to NQ.
that we could, you know, we wanted to be careful about that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
All right. New
Yes, Chair Powell.
highs.
Could you speak a little bit more about?
So
the
who bought VWAP?
timing,
I went
is
long
there,
on 150
enough
contracts
data,
on at
between
VWAP,
now
so
and, say, May
probably gonna retire
to
now.
Be able to get
big
the
deal.
kind of confidence that you say that, you know, you still need, or by June, is there enough data for you? Just give us a sense of your thinking there. Thank you.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
But, I mean,
Rip in, rip in.
Is there even enough data for you to be able to?
We'll take,
Sorry.
you know, things can happen during an intermeeting period if you look back. Unexpected things, so I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us
So
higher confidence.
did anyone else?
Inflation
Did anyone
is
go
moving
long
down
around the
sustainably toward
50
2%. I
50%
also mentioned,
retracement?
and we don't see this in the
Anyone
data
still
right now,
long?
But if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to
Spectre, you got
specific
3 lots at 50%. Nice.
Hi,
Lucas,
Chris Rieger, Associated
18324
Press. Thank you.
long. Wow.
In the
Nice.
projections, there is an increase in the neutral
Simon's
rate,
been
as you
long.
know, and higher rates.
Deca,
a quarter point
long,
higher rates
5264 and a
projected in
quarter.
2026.
All right, good.
Can you speak about what might be behind
Nice.
that? Is there a real sense here that the economy
Nicely done.
has perhaps changed in some way that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question, I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, you know, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. I mean, my instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero. In some cases, I don't see rates going back down to that level.
My expectations are.
Around that.
Great. And just a quick follow-on.
I think we're
the
just going to
projection
continue. I think we're going to
shows,
close around
2%
highs today.
core inflation for the end of this year. It's
That's
already-
my expectation.
or You mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident?
You guys want a link?
Or the last press conference, you sounded pretty optimistic you would get more confidence.
That's the stream I'm
this
watching.
year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your the last part of your question again.
Well, just are you still optimistic that you'll get the confidence you need this year?
I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the income.
What's wrong with
It
Streamlabs?
is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year. and give us a higher degree of confidence that what we saw.
All right, I want to see a
was
pullback here.
Inflation moving sustainably.
Let's go to get the 400 again.
Toward 2%.
Gina Smilik, The New York Times. Thank you for taking our questions. Per your comment to Ann that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is
Your
actually
demand.
feeding demand because workers are
demand.
getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year.
Dax is
which
short
a
and adding
bigger
in short
economy
positions. Ooh,
where
good luck.
inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor
All right,
force.
you added
So
nicely to your combined accounts
in and of
today. Done for the
itself,
day. Nice.
Strong job growth is not a reason,
Yeah, we're not short
for
this.
us to
Not
be
short.
concerned about inflation.
That'd be pretty risky. Freaking all-time highs.
Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now, and in particular, do
You really want to short this?
view the kind of easing in financial conditions since the fall as consistent and compatible with what
You
you're
could
trying
do
to
it for a
achieve on the
scalp, but I
inflation
mean, man.
mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really
That,
demand. They're also supply
came right
side
back here
things
to
happening,
the-
but I think those are demand side
that wick.
things happening.
Boom.
We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite, financial conditions sometimes being tighter, sometimes looser.
Life lit. I'm not listening to FOMC meeting like it's going to give me an edge. Don't get it twisted.
Michael McGee with
I'm not even
Radio
listening
and
to what they're
Television.
saying.
Can you give us more color?
Not like I'd be able to
on
glean any information
how
from that.
The committee is
Gotta
thinking
really
about inflation
direct a scalp.
dynamics now.
That'd be stupid.
What we've seen at the beginning of the year, are they more one-off?
Algo's already
increases
reacting
that
way
will
faster than I
fade,
could.
Or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying, we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully.
I would not be
and-
comfortable
and,
even
feel
scalping
more
strong. I would rather
confident
just
that inflation is moving down
wait for a
sustainably to
retracement,
2%
go long,
when we
personally.
take that step to begin dialing back our restrictive policy.
But yeah, sometimes when Powell just
Desire to have
ends,
confidence that
market just
inflation is continually moving down.
when
Has the
he's done with his
recent,
Q&A, it just freaking
numbers
drops.
we've gotten for inflation data dented that
Kind of a
confidence
gamble.
at all?
in case you weren't sure.
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Go to Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from, the Federal Reserve, first independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Daniel, are you able to completely put down the charts when you're done for the day, or do you peek at it throughout the day? I usually often just walk away and don't look
We
again.
place a tremendous amount of importance on our engagement.
Sometimes I'll swing by in the afternoon just to see, but for the most part,
Respect.
I'm done.
In this case, I would say those are, our mandate. Our mandate is for maximum employment and price stability, and the other things.
Samuel, are you glitching out, dude?
And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
3x your funded account today? Wow.
Saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns.
Hey, Frog, start on the high type
And
frames.
because we're
Start on the
talking to
daily.
People who in our system of government have
Get
oversight
a bigger
over our
picture of
activity.
things.
So that's
Go down
but
hour,
at the end of the
4
day,
hour,
we take that on
2
board.
hour,
We
1
have to
hour,
make
90 minute, 30 minute.
our judgments, and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Claire.
Thank you. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask a question.
All right.
As chair of the FOMC, would you want to see unanimity on the committee?
Just closed half
or
of
some
ES long from
split, meaning
52.48.
No more than one
Nice
dissent
job, least paid.
before you begin cutting rates?
That was a really good entry you got there.
We're very consensus-oriented
Very good.
Organization, and we do try to achieve
That was entry
consensus
right here,
and
right at
ideally
50%
unanimity.
retracement.
People do dissent.
Very
It's
good.
something that happens. Life goes on.
52.75.
It's not a problem.
Beautiful.
We've always had
Beautiful.
dissents.
Hard to complain about a trade like that.
You
That was really
respect
nice.
thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that
Your
takes
GSE
a
are short
position
at
that
1.
that you have long
There's that
opposed
contract, all right.
just to understand that book. So I treat dissents with
See if
with
you get a
real
little knife
respect as
down.
well.
Simon, one would be available.
Simon Urbanovich with The Economist. Can you hear me?
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for
All right,
the full year,
top of the hour.
4.0%.
1 hour left
In
of the
February,
market.
we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our 2 goal variables. We all monitor the labor market very, very carefully, and I don't see those.
You guys want
cracks
to keep
that
listening to
we-
this?
We follow all the.
I just want to know when
stories
it's like,
that are out
when he's
there
done.
about there being cracks. But the overall picture
That's
really
what I'm
is
most interested in.
strong labor market, the extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth.
Would it be
You're seeing
counterproductive
big
to start,
increases in
continue
supply.
trading with a very low
You're seeing
account?
strong wage
Would it be
growth.
better to go out and earn
Wage
more
growth
money?
is
Yeah.
gradually moderating
I
down
think
to
that's
sustainable
key,
levels.
honestly. It's just
In
trying to
many,
increase your
many
income.
respects,
Because then you have to
things are
detach from the
returning
money
more
with
to
trading.
their state
So it helps
in
if you like
2019, which we can think of as
almost have like
normal
a
for this purpose. That's job
indifference
openings
towards
and
it in a
quits,
way.
and surveys of workers and
Don't
businesses
need
are
to,
always interesting on
you know,
this.
withdraw
I'll tell you
money every
how
month when
easy
you're
it is to
starting out
find a
because it's
job, how
probably not
much
going to
how
happen.
easy it is
So
to find a worker. Those surveys have both come down. So the labor market's in good shape.
Roger, you made 7% on your challenge today. 1% left to pass.
We do
Nice.
see things like the low.
Problem is, I still need
hiring
2 more
rates.
profitable days.
People have made the
That's
argument that
fine,
if-
don't you think? It's just,
if
you know,
layoffs were to increase,
do trade a micro on the day 2
would mean that the net
and just take a
be
half a
fairly
point or
big
whatever.
increases in unemployment. So that's something we're watching, but we're not seeing it. Of course,
Alex, this is a
initial claims are very, very
press
low,
conference
and
with
if anything,
Jerome
they
Powell.
track down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, you know, we do expect the unemployment rate to, you know, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing, essentially, is and we're not discussing all the many other balance sheet issues. We will discuss those in due course, but what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea.
Well, now it's just boring.
That's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress. And that can cause you to prematurely stop the process to avoid the stress. And then it would be very hard to restart, we think. So as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And, you know, fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back to the other issues about the composition and the maturity and revisit those issues.
If you're
But
Powell, don't
it's
you just want to
not
retire and
urgent
just
right now. We
be
wanna
a
get
rich grandpa?
This
Sounds more
decision
fun than
made
doing
first,
this.
and then we can, when the time is right, come back to the other issues.
Hi, Victoria Guida with Politico. Also on the balance sheet, you know, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink, we
Gentry,
could see more
funded.
turbulence?
Funded your Bullnox account right there on the drop.
watching carefully.
Nice job.
But one of the reasons we're slowing down.
Jason, that's what I'm saying.
will
He's already
soon
rich.
enough,
Just retire.
Fairly soon, I should say, slow down, is that we want to avoid any
Just likes to
kind
burn data.
of turbulence. I'm thinking particularly
Good
about
little
the banking sector.
options joke for the crowd.
And we had some indicators.
funny.
The last time, this is our second time in doing this, and I think we're going to be paying a lot of attention
Grinding
to
higher.
the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle where we wound up in a short reserves situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates, those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops nearer at zero?
I think we broadly think that once the overnight repo stabilizes either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that.
This feels like a waste of time. All right, Anderson, we'll catch you later.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask also about the balance sheet. Will you said that starting the taper sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point? And will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower...
Andreas Topsip has an activation fee EU.
The idea is that...
At least it's not monthly. I mean, Apex has that too. I don't know about the other ones, but...
risk of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends...
I don't like the Q&A. I'm not an economics guy. This is over my head.
Money market conditions and asking ourselves whether
Very dry.
they're telling us about reserves. Are they, right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these what's happening in money markets, in particular, a bunch of different indicators, including the ones I mentioned.
What indicators does he use?
Getting close. Then, though, you reach a point ultimately where...
Do you think Powell uses Bollinger Bands?
Allowing the balance sheet to run off, but then from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand, and then that ultimately brings you ideally in.
Looks like an RSI guy to me.
Brings it into
nice.
A nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile, and we don't want to again find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, you said you're waiting to become more confident that inflation is getting to your 2% goal before you cut rates. Can you just sum up more specifically what data you're looking at that would give you that confidence?
Sure. So most importantly, we're looking at the incoming inflation data and the contents of it and what they're telling us. So that'll be, and also the various components. So obviously that's what we want. We want more confidence that inflation is coming down sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening in the economy. We'll look at the totality of the data, including everything essentially, as we make that assessment. But the most important thing will be the inflation data that's coming in.
Well, are there things that you would give more weight to, like wages?
Wages is one thing. We don't. Our target is not wages. It's really inflation. We would look to the fact that wages are still coming in very strong, but they've been wage increases. That is to say, wage increases have been quite strong, but they're gradually coming down to levels that are more sustainable over time, and that's what we want. We don't think that the inflation was not originally caused, I don't think, mostly by wages. That wasn't really the story. But we do think that to get inflation back down to 2% sustainably, we'd like to see, continuing gradual movement of wage increases at still high levels, but back down to levels that are more sustainable over time.
Let's go to Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, could you say at this meeting whether there were more officials who wanted to be careful and
Dave, I didn't get any good moves from this.
about rates?
There's VWAP 50% retracement was a solid buy opportunity. Of course, in hindsight, no trades for me though. Why did I switch from options to futures? It's easier to manage risk on futures. You can get filled way easier. You can have a stop loss that's hard and set on the charts, and not like a mental stop loss. And with options, if you want to get out at a certain point, it's possible the options pricing has changed drastically, or you can't get filled the way you want. So there's certain simplicity to futures that I really like.
Thanks, Chair Powell. Brendan Peterson with Punchbowl News.
Punchbowl
I wanted
News.
to ask you about central bank digital
Who let that
currency
guy in?
stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But folks, I know you have said to Congress that you are going to wait for approval before
Volatility
the
crush
Fed
is terrible, yeah.
launches anything. But folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of the CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder. So we are not
Try harder, pal.
getting ready to. We haven't proposed. We haven't come to a conclusion that we should propose, or anything like that. That Congress consider legislation to authorize a digital dollar, and it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. It has applications in wholesale finance, in the payment system. And
Only
so
old people say
we need
finance.
to serve
Everyone else
the
says
public.
finance.
These issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are, but it's wrong to say that we're working on a CBDC and then we've secretly got a lab here where we've got one and we're just going to spring it on Congress at the right moment. We don't. I haven't at all.
P&L, you
in
wanna
my
see
own
P&L?
mind, made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that.
Retest of
It's
400?
part
Yeah,
of
maybe.
our payments landscape. That's how I would characterize it.
I'm gonna run these wicks down here.
Thank you. It's Mark Hamrick with Bankrate. Mr. Chairman, April 27th will mark the 13th anniversary since a Fed chairman began holding regular news conferences. How important has that higher transparency been in your view, both for the proper functioning of the central bank and also in
Boring.
accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that look like?
I generally think.
Are you
this-
scamming us,
this
pal? I think that's what
movement
he's
actually
asking.
started, 30 years ago, 30 years ago, when some
Really?
academics.
Finance bros in the 20s in New York City say finance?
A more
Oh.
transparent central bank. If the public understands your reaction function, the markets will do your work for you. They'll react to the data. And so it all happens that way. And so there's been a march toward greater and greater transparency. And that certainly Chairman Bernanke advanced that, so Chairman Greenspan did, Chair Yellen did. And so we went from four press conferences a year to 8, so now every meeting really is live now. I think that's a good innovation. I wouldn't want to turn it back. We also have done a bunch of other things. We have an annual supervision report.
Rasmus, you can take a
feasibility
trade.
report. There's a long list.
No
of
one's
things
stopping
that
you.
We've done. I think nothing comes to mind as really desperately.
Something sets up where
very
I have a little bit more confidence
shortage of
in it,
FOMC
and I
participants
can
speaking to the public.
have pretty well-managed risk,
that-
then
that
maybe,
channel
but
is full, I would
I'm
say.
not just going to do it on a
So
coin flip.
I think it's generally broadly helped and made things better.
If that's your approach to trading, then
Not every day and in every way.
well, you're in for a long and bumpy
Has there
road.
been a day where you wanted to put that genie back in the bottle somewhat?
Of course not.
Let's go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Not to harp too much more on confidence and inflation, but you did say earlier in this press conference that
I mean,
the
VIX
inflation
is
data hasn't
at
eased anyone's
lows.
confidence.
I don't.
But when you testified before the Senate,
That does not make me want to
weeks ago,
short.
You told lawmakers that you are, quote, not far
Makes me
from
think more
receiving
limited
the confidence
downside.
needed on inflation to begin
Now, if
cutting rates. So
VIX was
are
kind
you
of
still
pumping and we're still at highs, then yeah, maybe I would be like,
What are we to take
yeah, I might be able to
by
position here for short, but
So let me
I'm
say
a little
my main
hesitant. I want to
message
see it.
in those 2 days of
I want
hearings
to see it
was
get off the
really
lows
the
here if
committee
we're in for
needs
more
to see
downside,
more evidence to build our
or
confidence
some
that
downside
inflation
rather.
is moving down slowly toward our 2% goal, and we don't expect that it will be appropriate to begin to reduce rates.
Do you get
until more
anxious,
time
scared
is
when
the
you
case. So
ever you
that's
open
the
a new
case.
trade?
I said
If I'm
that
like
any number of
oversized,
times, so
over
those are
leveraged,
kind
that'll
of the
do
main
it.
part of the
I'll
message.
increase the heart
We
rate.
repeated that today in our statement. I also, to the language you mentioned, I really pointed out that we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We had a series of inflation readings over the second half of last year that were really much lower. We didn't overreact, as I mentioned, but that's what I had in mind.
But given that you said that PCE for February 2.8%, the estimate, and that we have been seeing core PCE coming down by 10% every month, I mean, wouldn't you be at about 2.4% this summer, June, July, to a point where you could cut then?
Well, we'll just have to see how the data come in. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see more, and we said it would be bumpy, and now we have January and February, which I've talked about a couple of times. So, we're looking for more good data, and we would certainly welcome it.
Thank you.
Thank you.
You gone? Bye. Kidding. Okay, no, bye actually. All right, that's done. Generally risking up to $300 a trade. I'm trading micros over here. All right. well, that happened. For me personally, I'm not a big afternoon trader. So I think I have to be a bit bullish, to be honest. We pumped on the statement, pumped when Powell was talking, and held that. So I don't think there's any reason I could see to short, in which case I need to see a pullback then to get long. And whether there's something that sets up where I like the risk and reward parameters, we'll see. I'm not huge into trading the last half hour of the day, last hour. It's my stats show I'm not that good at it, to be honest. Yeah, I think you have to be a little bullish. Pullback feels necessary. Yeah, sure. I'm down for a pullback. There's the books. There's ES. Some liquidity overhead. NQ. Nothing too interesting over here. Maybe. Let's see. Bookmap insanity. I don't know. It's not that bad. Are you talking about like at the bottom? Do all these platforms use the same market data feed? They're all from Rhythmic, but they're different feeds. It could be the same feed, but on a Mac, it's a little, unfortunately, it's a little bit more complicated. Penguin Lord, locked in 625, done for the day. Nice. Very good. What concept are you using? My own. Do you follow technical analysis when you day trade? Yeah. Definitely use technical analysis. How was your day? Sad boy hours is 1 a.m. here. How was your day? It sounds like I should ask you. I'm feeling pretty good.
Pretty good.
You guys want to see it? Here. This is Apex evaluation. Come on. Just push. Come on. You know you wanna. And Q, don't be a little biatch. JC, on like my regular real money account, I'm trading like 3 to 8 micros on NQ. Maybe 1 ES. Come on. Just push through. We can do it. Do you prefer day trading to your other online ventures? Yeah, absolutely. That's why I do so much of it. It's my favorite. Just gonna kill it. Up 265 on except for that one, I'm up an extra 200. This is across 10 accounts. Right? Let's make sure. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, that's all of them. Across 10 accounts. Thanks. This is just the this is my first day in this evaluation, whatever Apex calls it, evaluation period. Yeah. So we'll see. We'll see how it goes. I have to make what, 3,000? Yeah, Tops Up only allows 3, so this is Apex. Did I get my fill? Ah, no. It was 2 points off of where I wanted to get filled at. Let's see. I think we'll retest that though. Whole lot of blue, yeah. It's, you know, when you, whatever platform you trade, you love seeing whatever color it shows your green days as. Like Trade of 8, you love like seeing a nice green circle, you know. Motive Wave, love seeing the blue P&L. Yeah, this is the funded. Not funded. This is the evaluation to be funded with Apex. But yeah, that's the trade copier. It's really nice. I kind of screwed up earlier. I was trying to remember how to do it, but it's a really good trade copier. Like the way it works is you add the account here, and then like, for instance, let's say you have a $50,000 account and then a $150,000 account. Well, you could make the $150,000 account, a 3x, sorry, not 32, like 3x whatever your $50,000 account's doing. Or if it's a smaller account, you could actually cross trade that to the micros, you know? So you could do, you could do 6 micros on your smaller account while your main account is trading minis or whatever. So it's actually a really good copier that so far I really, really like it. So yeah, I'll let you know how stuff goes there with Apex. You know, it's not my trade. This is through Motive Wave. If you have, I think, order flow version of Motive Wave, or the next one, the more expensive one, you get the trade copier. Okay. I don't have a tutorial. They're literally like if you have Motive Wave or Edge Pro X, this is easy. Trade copier. You call it something. You make a lead account, which these are all $50,000 accounts. It doesn't matter, and then you add every account you want copied. Right? That's all you do. It's really easy. And then when you go to place a trade, instead of trading on the account, you trade on the copier. So that's how you do that. So can you explain what happens after your trade valuation? Yeah. So the company will then email you saying, "Congrats, you passed. Here's your next steps." You know, and so usually it involves like a fee. Like with Top Step, you pay $149, and then you get the funded account. With Apex, I think it's $85. Apex has a fee, and then you then get usually, is it new credentials? Yeah, I think you get like new credentials that you log in as soon as that account's ready for you. It too will be a simulated account, but when you know, as long as you follow their rules, you can take real money withdrawals from it. So that's how that works. I like it, and you know, if you watch trades by Matt, he's been using the trade copier across 20 accounts. He makes like, if he makes a $200 day, that's 10 points on NQ. Not hard to do. That's $4,000 across all the accounts. So it gets pretty wild. So I just wanted to try it out myself. I got to pass this evaluation first. Fingers crossed. NC Trades, what's up? Current investor trade member, what's up? I've been trading for 4 years. This is, copy trading, Apex, and this is my real money account behind it. That's what I was trading earlier. No trades in the afternoon on the real money account. Well, I had one trade, but it was off stream. It was a great trade that I tightened the stop loss on prematurely and got stopped out of what would otherwise been a great trade. Are you profitable? Yeah. Recently profitable, I would say. I mean, I've been profitable the entire time, which most people, I know it sounds ridiculous to say, but not consistently. And now I crossed the threshold more recently into being consistent. So feels like all that hard work and all the years, all the screen time, like starting to pay off a little bit, which is good. Because it's kind of a brutal journey, you know. My strat is pretty, I'm going to be honest, pretty discretionary. I use supply and demand zones to get a roadmap for where, you know, levels of interest, where I really want to pay attention to what price is doing. So I have a combination of different things I look for, a lot of price action stuff. For instance, I can give you an example. Here's something I talked about early in the stream. I didn't take this trade because it was just too choppy, but something I like seeing a lot is, like, for at lows, I like to see a dip lower. So here's what I was talking about earlier. We're at the lows. It was way too choppy for me to want to take this trade, but I wanted to see one dip lower, put longs in pain, stop some people out, and then see that get bought up. Then I take that long. So that's it's a counter trend trade for the most part. But then, yeah, usually looking to get back to recent highs or high of day, or if there's any other levels of interest on my chart. So here, it didn't hit my target. There was not enough momentum in the day. So I probably wouldn't have even, my target probably would not have gotten hit on that trade anyways. So that probably would have been like a break-even trade. So that's one of the things I look for. A lot of it is just like getting really familiar with the indices that I'm trading, and then reading price action. I have a couple of kind of confluences I look for before entering a trade. I try not to go against those. Keeps me on the right track. Did it take 4 years to get consistent? Yeah, it did. Some people can do it faster. If you're stubborn, I was probably a little stubborn, or bouncing around a little too much from strategies, so it can take you longer. You can slow yourself down. To what hour you can trade NQ ES with Apex? I think it's 5 Eastern, is like 4:59. I think you got to be out. Spitfire traders, what's up? Yeah, it's been a long time. Trading gone today? Honestly, not great. I was able to get a little scalp here. That was decent, but on my real money account, nothing really to speak of. About a $200 loss on that one. In general, that's been going pretty well. We'll be doing a stream tomorrow. Yeah, I'll stream tomorrow, 8:20 Central Time in the morning. It is a race. Go at your own pace. It's about the journey. Yeah. As soon as you start comparing yourself to other people is when you're just going to set yourself back. You're going to get down on yourself. How long did you demo trade? Now, I'm going to go against some of my own advice and say I didn't demo trade. I had like enough disposable income where I felt like I could handle like $1,000 loss and I would be fine, you know, like, and it helps. Like I need that feeling of stakes, you know, when I'm trading, because that's, to me, I gotta battle the emotions more than like my analysis or technical analysis. I like a short here. Oh, I might do this unfunded or challenge. I'm gonna try a little short. Just looking for a little knife down. Nothing crazy. So yeah, I didn't really demo trade, to be honest. The most demo trading I did was like in the funded, in like the combine world. Is TradeAvate good? It can be. Sometimes it gets a little funky, and I don't know. Yeah, this pullback I might be asking for too much on this one. Let's see. I don't have a chart setup video, no. So I don't necessarily know how to trade with this trailing drawdown on Apex. I don't know how I should be treating each trade, so it's going to be a bit of maybe a little learning curve for me. I think I had to trail. I mean, I don't know. Is that what other Apex traders do? I don't know. I do feel like I need a trail. Boom, target acquired. That was beautiful. Really good entry. I did not have to sit in that trade long at all. 670. 850 on that one, but 670 across 10 accounts. Not bad. I think I should call it a day there on, probably from trading in general. I'm definitely gonna not, yeah, I'm not gonna put that at risk. So I'm gonna shut that down. Again, you know, the last half hour of the day, I don't really want to overtrade that. But that was clean. You know, that was clean. Well, Miss Beats, what's up? That was a quick one. Yeah, just got the knife I wanted. And then out. You know, not gonna. If it keeps going down, I'll try to double dip on that, and that's bad news. I just read this quote from. Well, it's a quote from someone else. I don't remember who, but it was saying a man never re-enters. Or what is it? Dang, I don't want to mess it up. Let me just pull it up because it's a great. I love this quote so much. And I'm reading Best Loser Wins, so I highlighted it because I thought it was such a great quote. Let me see if I can find it for you. I have so many highlights from this book, and I'm like not even halfway done. No man ever steps in the same river twice, for it's not the same river, and he's not the same man. Sit with that one. I love that one. Why'd you like shorting there? This is, I'll show you two reasons. One, this to me, when you start to see like this, to me, there's like a mini bull flag or bear flag rather, and we get a rejection, we get an upper wick there, tiny body candles, and my other point of confidence was this is now entering a bear cycle, and that's looking pretty good. There's nice separation between those, which is what you need. So just that alone for me was enough to try that scalp. Easy peasy. See, so now if I'm still in that, well, the book is Tom Hogard or whatever, and that quote is from some dead guy. So if I still have this the brokerage open, you know, I see it continuing, and then I maybe try to double dip that, and I historically do not do well double dipping on a move, so I am resisting any urge I get there. Especially since I told you, like, I'm bullish, you know, overall bullish. I can't forget the bigger picture and just kind of be focused on a 1 minute move, you know. So, but yeah, that was a nice little move. I'm looking forward to doing these, you know, these 10 accounts. Guts. Okay, you say Apex, you should run a hedging strategy or just take partials with lower risk than a regular EOD account. Yeah. Say that you're 30 points positive and let the price go back 5 points. You basically lost 25 points. You're drawn back to 5 points. Yeah, that's why I think trailing is the move, right? I think it's maybe just going for quick moves like that. Anyone, feel free to correct me, but I kind of feel like you have to trail a little bit, which I don't know how well I'm going to like that. We'll see. You have to get 6% to pass the evaluation, your ROM TV. $3,000. Well, it's too late with the static account Blizzard. I bought 10 50Ks. So NC trades, you limit yourself to trading 2 MES, 2 micros on a 50K PA account. Trading a size that I feel I can withstand pullbacks without having to worry about my trailing loss. Okay. Can a PA account trade during PAL NC trades or any other funded Apex trader? Richard, thank you for the nice comment. I appreciate it. The chart on the right side of the screen with horizontal lines. Oh, this is a delta footprint chart. Delta footprint. Not time-based. These are, this one's actually range-based. Maple Man, your opinion on options trading is the same as going to a casino? I disagree. I mean, if so, like, options traders are just the luckiest people ever. Like, look at Vincent. We were just talking about Vincent earlier. Like, he's crushing it. He trades options only, as far as I know. Okay, Apex PA accounts are not allowed to trade during scheduled news events, which is, honestly, it's for the best. They don't want people just YOLOing and them having to pay someone out, like, for some crazy YOLO. I understand that, but it's for your own good, too, honestly. You should not be. You don't want to get that in your head. Quant Tower slow? No idea. Never traded it. Never traded with it. Do you follow Trade Pro Academy? No. You would way rather trade with Trade Day instead of Apex. Do they allow like 10 accounts or anything? That's why I wanted to try. That's why I did Apex. What I like about like Motive Wave, Edge Pro X, like maybe, I mean, I guess other platforms are like that too, but it's like I have these cloud-based, like my charts are kind of in the cloud, and the layout is rather. So when I pull up, I'm on Motive Wave now, but I can pull up Edge Pro X with Apex, and it's like the same exact setup, just different accounts. So that's one thing I really like. And as you can see, like the trade copier worked beautifully. I really like the trade copier. A lot of similarities in yours, Carmine's, and Trade Pro Academy's mentalities. All right, cool. Yeah, I don't know anything about it, but I think Carmine's got a good approach to everything, to the markets, just trading. Well, if you don't have a strategy, then you're gambling. I agree. Like when people see they saw my video about trading, I tried day trading with $1,000 and like, this is pure gambling. I'm like, yeah, you're right. Honestly, can't argue with that, honestly. But now if you say what I'm doing now is gambling, I would disagree. Delta footprint charts. Footprint. Search YouTube. I mean, there's some channels about footprint charts. It's day here. I'm in Chicagoland, USA. It's almost 3 in the afternoon. Do you look for trap traders in supply and demand zones as your primary mode of choosing an entry? That's one aspect to it for sure. I would say lately I've been using supply and demand zones more as targets than as like entries. So I use them more as exits. But definitely like look at today, a 2-hour demand zone was just held all freaking day. So that was a great entry point for trades today. And so yeah, what I like to see is I like to see a little peak below, trap some early shorts, and then I'd like to see a buy up, and then those shorts get annihilated. So that's kind of what I look for. I like to, one thing that really helped me was starting to look for positions to be put into pain before I enter, because a lot of times I'd be right in my overall analysis but early, and so I wait for like that one move that's gonna like get a lot of people out, and then I try to hop in. Trade day has the same profit and less drawdown as Apex on 50 accounts. Oh, okay. Oh, and way pricier? Wait, so trade day is more pricey? Are you allowed to pass the valuation within a day, bro? Like, yeah. Yeah, right now they have a promotion going on or whatever where you can do 1 day pass, which that's, it's a little gambly. It's kind of encouraging gambling, in my opinion, because with a 50K account, you're shooting for a $3,000 profit, and your drawdown is what? Your live trailing drawdown is negative 2,500. But I don't know. You're like kind of shooting for the moon there, which probably not the best habit to have. Now again, I haven't traded options in a while. Every once in a while, I still like options, but futures to me is just superior. I don't trade Forex, no. Uzumek, you got a perfect entry on that long. Nice. Yeah. Right off that pivot too. I like my pivot points. We don't need this supply zone anymore. 318 highs. Don't really need that level anymore. Don't need this anymore. Let's clean this up. It's clean long entry. Very clean. Daniel, thanks so much for your videos. I started watching with the trading challenges with Pro Trader. I started with Forex trading, and your videos are just what I needed. Good. Appreciate it. I'm glad you enjoyed it. Yeah, 1 day pass and cheap resets are a bit predatory, says Blizzard. Yeah, I'm not a fan of it's so enticing, right? Like even me, I'm like, ooh, I could be funded in a day. That's sick. And you kind of think about it, like, do I want to? That's like you're trying to get, I don't know. It's a bit much. Where you're trying to get how many points? Like 150 points on NQ. I don't know. In 1 day, that's tough. I don't like Forex. Exclamation point Forex in the chat. You can watch my video on it where I tried trading it. To switch from Forex to futures, I imagine so many people are doing it. That's all I hear. I feel like it's not so bad. I think futures, there's a lot of simplicity to futures. Obviously, they have their own kind of intricacies, but in general, futures, to me, they make sense. Forex to me is way more confusing. Time to short, not long. I don't know. I disagree personally, just because VIX is at its lows. We made a lot of gains during FOMC and held those gains. So I feel like if there was going to be a sell-off, there was a chance for bears to do something, and they didn't do it. So buyers seem to be buying the dip. 5 contracts. Yeah, 5 contracts, but imagine the drawdown on, you know, 5, let's see, 25. Yeah, that's just, if you can handle that, great. If you just nail your entry, go for it. Got into options because I saw your 60K video. What made you change the futures? I kind of answered that earlier. It's like, it's harder to manage your risk with options because the prices can move pretty wildly, and it can just, you can't really have hard stops with options, and with futures you can. So it's like you're very little slippage with futures, so you know, just like maybe a tick or two, but 100% short, says Warner kept. I don't know. Nothing's 100% in the markets. Nothing's 100%. Futures, commission and fees, like there's fees from like the intermediaries or whatever. So commission and fees. So it's a little bit, there's not the spreads from Forex. Just keep in mind the round trip, like was like $4.80 with my broker for a mini contract, something like that. I'm using the order flow subscription on MotiveWave. CG Churchy, I traded both. I traded individual stocks and ETFs like SPY and QQQ. The problem is you can say 100% short, but like, what does that mean? Like, what are the parameters of your short? Like, are you saying like we go down 20 points, but we also would have been in drawdown 20 points? Like, what does a short mean to you? Because if we kind of double top here and then short, like to me, that's not valid to say, oh, 100% short right here, you know, that's premature. So it just depends on like what you actually mean by that and what kind of parameters you would use for a real life trade, not just throwing out something in the chat, but like, how would you actually trade it? Where's your stop loss? What's your target? Are you holding after close? You know, me and Peter McKinnon are brothers. No, we don't look that much alike in real life. I promise. It's just, you're just getting confused by the long hair. He's like also way taller than me. And he's Canadian. Do I look or sound Canadian to you? Hey. You're petrified of futures because the Apex advisor explained the dangers of max loss from trading on margin. Okay, this is honestly just use a stop loss. Just use a stop loss, and know your broker's margin requirements, and if they're gonna like liquidate you, well, make sure you have buffer in your account. Make sure you're trading a size where that's not gonna be an issue. So, oh, I'm hotter than them. Okay, appreciate that. Thank you very much. Good community, yeah. Followers are insightful, and there's good convo going on here. Yeah, that's I really appreciate that about the live stream. That's why I kind of keep doing it. Is the people in the chat, by and large, 99%, great comments. It's insightful. We have good questions, good conversations. I think it's really, really good. So it's not toxic. That's not what we're going for here. So, what Peter McKinnon is definitely way richer than I am. Don't even kid yourself. Have you had a stop loss get missed? No, but I have like, if I was going to the news or something, I did lose like maybe like 2 points on NQ, which is like $40. So slippage, Streamlabs is a douche. I'm tired of Streamlabs negging me, man. And then Streamlabs comes back at you with refrain from foul language. Wow. I gotta teach Streamlabs a lesson after stream. I don't want you guys to have to see it. It might get ugly. All right, market's closed. Whew, that was a long day. I felt like I streamed almost the entire day, but I took like 3 hours off. Well, thanks so much for joining. Tomorrow, 8:20 Central Time in the morning, I'll be back. And maybe I'll trade a little Apex valuation accounts. Maybe we'll trade some real money. Either way, you'll see the trades. Gonna end the day up. Yeah, up on the challenge account. Real money down 178. But yeah, live to fight another day, right? All right, that's it for me. Have a good rest of your day, and I will see you guys tomorrow. Peace.